Gold flat. Bitcoin doing well, 107K, 600. Yep, 107,600 bucks. And markets are going up. Everything is so shiny bright. Oh, new home sales fell 13.7% in May. What else? Oh, mortgage rates stifle prices. Huh, okay. Oh, consumer confidence fell in June. The Conference Board's Consumer Confidence Index fell 90 to 93 from 98.4 in May.
In today's news recap, WGC on the warpath to digitize standardized gold market to enhance trust transparency. World Gold Council CEO David Tate has highlighted how the council is addressing 4 major challenges in the digitization and standardization of the gold market, namely a lack of trust, poor understanding, market fragmentation, and a lack of global governance. He noted how the WGC had recognized a significant lack of trust in gold at both the retail and institutional level. For instance, we know that approximately 50% of people don't trust gold, which has led to warnings not to buy the products from some regulators. Today's investors and consumers demand transparency and integrity and want to know for certain that products have been responsibly sourced and produced, he said. Tate also noted that it was clear that 60% of people did not understand gold, its market, or how to safely access or invest in the asset, again, leading to warnings not to buy the product from some regulators. In this context, Tate said the WGC had set out to solve for integrity, accessibility, and fungibility of gold and the gold markets through its Gold 247 project, a digital transformation initiative designed to instill trust and transparency in gold and its market, and therefore lower the capital cost to entry from global investors. He noted that to address gold bar integrity, the London Bullion Market Association and WGC had partnered to develop and implement an international system of gold bar integrity. The GBI program aims to put all legitimate gold onto an immutable blockchain-based database where buyers will be able to clearly see that the investment bar, coin, and, when technology allows, jewelry they purchase was resourced responsibly, refined reputably, and only passed through the hands of legitimate actors, he said. Tate said the WGC and LBMA were working with Swiss technology company Exidras to develop this database and have already made considerable progress. The LBMA has made exceptional progress in this regard, bringing at the last count 93 of 107 of their good delivery list refiners onto the system in very short order. In addition, all 33 WGC member LSM companies are in the process of adopting the database. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Woof. Boom, bada bing, bada bum. They're way, way up there. Yep. Keep moving higher because of the liar. And we'll get to the liar and why they're moving higher in just a minute. The S&P 500 up 0.8% today. Yep. Putting it a few points away from an all-time high that it hit in February. What happened in February? It's up more than 27% from its interlow day in April. Oh, you mean April when the trade war was going to happen? That never happened. Again, a liar. The NASDAQ hit a new record, up 1%. Dow up 404 points. And this is what they wrote in CNBC. Stocks rose to their highs of the session after White House spokesperson, some bullshit artist, Caroline Levitt, played down the July tariff deal deadlines that have been looming over the market. Quote, the deadline is not critical, just more bullshit from the president. Oh, no, she didn't say that. Perhaps it could be extended. But that's the decision the president will make. El Presidente, I am in charge. I tell you and the world what to do. Could you believe this fucking bullshit? Could you believe this fucking bullshit that we got a dictator one after another running our country? Oh, you forgot dead in his fucking mind, Biden? Oh, you love the genocide Joe, don't you, huh? Hey, send more money to Ukraine. Get to work, you scumbag plantation workers of Slavelandia. I want your money to give to the military-industrial complex. I'm a little fucking piece of shit. I'm your president. I only got 5 draft deferments, but boy, do I love war. Couldn't fight my way out of a paper bag, but I'll send other people to go fight and die. America. Anyway, going back to the markets. Yep, Levett's comments further validated a main reason behind the surprising comeback from the market lows in April, that President Donald Trump would never actually implement on his Liberation Day tariffs that he announced in April and eventually pushed off after they sent the markets reeling. Again, another day of Trump bullshit. Quote, the markets are looking forward, seeing lower interest rates, less regulations in the banking sector. Yeah, going on and on, this guy. Managing partner of Harris Financial. Yep. Anyway. Brent crude, it's only at $68 a barrel, down from the high last week. What was it? $80. Gold flat, Bitcoin doing well, 107K, 600. Yep, 107,600 bucks. And markets are going up. Everything is so shiny bright. Oh, new home sales fell 13.7% in May. You fucking kidding me? Yep. What else? Oh, mortgage rates stifle prices. Huh, okay. Oh, consumer confidence fell in June. Let's see. The Conference Board's Consumer Confidence Index fell 90 to 93 from 98.4 in May. Yep.
In today's news recap, gold remains an attractive source of diversification. A survey of 75 central banks managing a combined $5 trillion of reserves showed that 1 in 3 intended to buy more gold over the next 2 years after stripping out those planning to decrease, the highest in at least 5 years. The report by the Official Monetary and Financial Institutions Forum, OMFIF, was carried out between March and May, a period of heightened uncertainty over the outlook for U.S. tariffs. After years of record-high central bank gold purchases, reserve managers are doubling down on the precious metal, OMFIF said. The dollar, the most popular currency in last year's survey, fell to 7th place this year. Yet with 70% of those surveyed saying the U.S. political environment was discouraging them from investing in the dollar, more than twice the share a year ago, according to reporting by Reuters. The OMFIF survey underlines our view that demand for gold among central banks is likely to remain robust. Although gold has retreated from record highs in recent weeks, we continue to see gold as an attractive source of diversification. Our base case is for the metal to end the year trading around $3,500 an ounce, compared to $3,325 an ounce at present. Regarding the U.S. dollar, we expect sustained U.S. policy uncertainty to erode the belief in U.S. exceptionalism. We recommend using near-term dollar strength to reduce excess U.S. dollar cash by investing or diversifying into other currencies such as the yen, euro, pound, and Australian dollar. International investors should also review their strategic currency allocations and consider hedging U.S. dollar exposure in U.S. assets back into their home currencies. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
The Wall Street analysts, the Wall Street Journal, were expecting it to improve to 99%. The survey's labor market differential fell to 11.1%. On and on. Everything down. Let's see. What else they have here? In June, consumers also turned more pessimistic about the future business conditions. In June, 16.7% say expect business conditions to improve. That's it. 16.7. It was almost 20% in May. And as that guy said, markets are going up. Crisis era bank capital rules eased. Yeah, you don't need all that money. Yeah, you don't have to. Won't worry about the losses. Don't worry about the banks going bust. Don't worry about the office building bust. And so one of the Fed heads guys, one of the Fed guys, Barr, said that this proposal significantly increases the risks of big banks. Yep, the banksters are running the show. Old story, different time. Yeah, cover your Trends Journal back. When's this? 2012. Got it? Got it? Nothing's changed. Oh, by the way, where's the Pope? Yep. And what else do we have here? Hybrid cars filling a gap in auto sales. We've been writing about this in your Trends Journal for years, saying that hybrids are going to be a big, big seller. They're cheaper than electric, and they give you more benefits. Smaller batteries, more mileage, and you go either way. Tesla's EU sales slumped in May. No kidding. Said it was going to happen, and it's happening now. What else? There's an article in the toilet paper Record. Revive manufacturing. Factories can't fill jobs. About 400,000 U.S. production positions remain vacant. The country's going to shit. Look what the people look like. People don't want to work. I cannot tell you how many restaurateurs I know that can't find people to work. And now, again, like it or not, approve or disapprove, we had all this cheap labor over here. We had all these migrants. We wrote about it as it was happening. That's why they wanted to come in, for all the cheap labor. And now you don't have them. And the American people, a lot of them don't have that work attitude anymore. Passed the Tax Act back in 2017, spewing out his bullshit that these big tax breaks he was going to give to the big corporations, they'd use that money for capital improvements, meaning that they would spend more money in product development and manufacturing in the country. They didn't. It was the biggest year in 2018 of stock buybacks. And year after year, president after president, from Reagan, one after another, is showing how this is a big fucking fraud. if I were president, and when Judge Napolitano becomes president, he may be against it, but I'm all for it. I want to go back to the tax rates they used to have for the multi-millionaires back when Eisenhower was president. I want to see the Buffetts, the Bezos, the Trumps, the Gates, the Zuckerbergs. I want to see a 90% tax for them and lower it for the rest of us. Stress Generation Z spends less. This is from the Wall Street Journal. Yep. Got no dough, living at home. Conference Board Consumer Confidence Index deteriorated by 5.4% in June. You know what? It's at 93. In 1985, it was 100. Consumer confidence weakened in June, erasing almost half of May's sharp gains, they reported. June's retreat in confidence was shared by all groups and almost all incomes, except, of course, the Bezos, his wife with the fake tits, man. Holy shit. Anyway. Yep. Consumers' outlook on stock prices continue to recover. Yep. And what else they have here? 19% of consumers said business conditions were good, down from 21.4% in May. 15.4% said business conditions were bad, up from 13.7% in May. And it goes on in your Trends Journal. Okay. As I said, where's the Pope?
What do you think of Celente's take? Is he spot on? Do you agree with him? Post in the comments section down below your honest opinion and share with the stackers if you have an exit plan to sell your gold and silver, or if, on the contrary, you won't sell your stack no matter what. Subscribe if you have not yet done so. And check this video right here because it's a perfect fit for you. I'll see you on the other side.